It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, September the 12th, 2016. Hope you guys had a great weekend out there. Welcome back to the action. Boy, markets are moving very well going into quadruple witching week. It is the third week of the month of September. Crude oil filled the weekend gap and will likely try to retest the lows. The E-mini has been on a wild ride, only touching the moving average twice in the last two trading sessions. Gold appears to be trying to give us a bit of a head fake going into tomorrow, and the euro is trading inside a range ahead of the opening bell in Asia for a big Tuesday trading session. I have another great newsletter in store for you guys tonight. We got a ton of reliable opportunities and a great plan for tomorrow. Before we jump into that plan, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, not to worry. There's a link right in the description of that YouTube video. Follow that link. Come over here and join me on the blog for the full-length version of our nightly newsletter. While you're watching the full-length version, don't forget to join the mailing list. I'll send you an email every evening when our nightly newsletter is ready to go live. Below the video, don't forget to download all the charts. You can have all the charts you see me using in tonight's video. Just follow that link below the video on our blog. And then don't forget, if you're not a member here at School of Trade, I've got a free pass for you. Grab your free pass. Come out and join me in the trade room this week as a guest. This week, next week, whenever it's easy for you. Grab your free pass in the upper right-hand corner. And then don't forget, you're going to learn more with me on my free trial than anywhere else on the interwebs. Register as a trial member on the right-hand side of the website for the who, what, where, and why School of Trade is considered to be the industry standard in day trading education and trading strategies. Guys, join the trial membership on the right-hand side of the website. Enough chatter here together. Hope you guys had a great weekend. Welcome back to the action, of course. We got a busy week ahead of us here. This is the quadruple witching week, the third week of every 3 months. And of course, those months are going to be the months of March, June, September, and December. And of course, this is the third week. That means this week is the quadruple witching week. What it really means is that as this week gets later, Monday and Tuesday should be a breeze, but Wednesday, Thursday, Friday starts to take on a mind of its own. So be aware of that. The 14th, 15th, and 16th. We'll talk more about it as we go, but be aware. Wednesday, Thursday, Friday, really Thursday and Friday, all four asset classes are expiring. Most professionals will be done by the time we hit Friday. They're going to get started on Wednesday afternoon. So Wednesday, Thursday, Friday are really going to be the days you want to pay attention to here this week. We're going to be talking about this all week this week. We'll go back and talk more about it tomorrow night on the newsletter. But one thing we know about quad witching week is we expect to see a little bit lower volume and a little bit more volatility as traders because all four asset classes are expiring. There's always going to be hedging positions that need to be taken off in the futures markets. And of course, because we trade futures, we do expect there to be the self-fulfilling prophecy says, be aware, and that causes traders to stay away. And then of course, combine that with some relatively unexpected, just because it's going to be offsetting futures positions for options positions, and that should be having an impact Wednesday afternoon, Thursday, and Friday. So we're not quite there yet. We got another big day tomorrow, but be aware that we'll be talking more about that as we go. The 14th, the 15th, and the 16th are what you want to be watching for. Now, we get a big day tomorrow because, as you know, to Wednesday, Thursday, Friday, that means tomorrow is pretty much the last full trading session of the week. We'll obviously be in our trade room all week. We'll be here just like we always are, trading Tuesday, Wednesday, Thursday, Friday. But again, Wednesday afternoon after the inventory report comes out on Wednesday, Thursday and Friday, we are going to expect to see a little bit lower volume and, of course, a little bit more volatility because of the offsetting positions out of the option markets. Of course, they're hedging in the futures markets. Now, looking at tonight, though, we have news coming out of China tonight at 10 p.m. Eastern Time. If you're going to be trading the Asian session or early London session tomorrow, please be aware of that. We have industrial production and retail sales coming out of China tonight at 10 p.m. Eastern Time. And then as you can see here, it's a pretty condensed session tomorrow. Everything is pretty much inside this 4:30 to 5 a.m. window until, of course, we go into the afternoon session for the Treasury budget tomorrow. So we got CPI and the PPI from our friends in Great Great Britain. And then we got the Zoo survey, right? Kind of a consumer sentiment survey, but for business owners in Germany. So we got that 4:30 and 5 a.m. And then nothing as far as any major news tomorrow in the U.S. session until we get into the afternoon session. Of course, we got that Treasury budget. And this time of the year, everyone's looking at the Fed for interest rate hikes. The Treasury budget is definitely going to be something that will be on the schedule for a lot of analysts, and so we'll be watching that tomorrow with all of our students in our chat room. So tonight, 10 p.m., from our good friends in China, tomorrow morning from Great Britain and Germany, and of course tomorrow afternoon right here in the U.S. session at 2 p.m. Eastern Time. I would imagine most of that news is going to definitely get things shaken up in the Asian session, in the London session, and then in the U.S. session tomorrow morning after 7:30, 8 a.m. We'll be looking to kind of ride the continuation of those moves, and hopefully we'll have a great session from start to finish tomorrow with all of our students. Don't forget, our chat room never closes here at School of Trade, so we'll be with all of our London-based traders for the London session starting off at 3 a.m. tomorrow morning, Eastern Time, of course, in our chat room. And then we'll be in the U.S. session, our trade room, starting off at 8 a.m. Eastern Time. And we look forward to seeing you guys there. Again, mark that calendar, though. Third week of every 3 months, right? March, June, September, and December. And of course, we're going right into the thick of it here Wednesday afternoon, Thursday, and Friday. So we're looking forward to making the best of the next full day and a half in the markets. Let's jump right in here now. Now you guys know the schedule here for this week and for tomorrow. Let's take a look at some of these charts. We got crude, S&P, gold, and we'll wrap up with the euro this evening. Crude oil is bullish and trying to retest the highs, but an overhead resistance trend line is standing in the way, and the weekend gap should give the buyers a reason to be worried that this may be nothing more than a head fake before we go back to the lows tomorrow. I got to say, the weekend gap is the big deal here tonight. In most situations, most, not all, the market will come back to fill the gap and then return back to the direction of the original trend it was in. And in this case, that means that sellers are looking for that move back down to retest that low at 44.72. So sellers need to break down strong below the battle zone for really the only wide open space down to the low at 44.72 tomorrow. Buyers, on the other hand, want to see the sellers fail for a move back to the highs, but they will need to get a successful breakout pullback above the resistance trend line to do that, which the bulls are waiting for. And the bulls, they got to be a little bit worried about this right now. The buyers had a shot to complete the major double up target overhead late in the day today, and they really couldn't. Lower highs as we come off produces this falling resistance trend line. There's definitely a bit of a triangle here right now, but in all reality, the triangle doesn't matter. It's all eyes and ears are on this resistance trend line right now. The big thing here is that there's that weekend gap. These don't happen very much. Remember, these are electronic markets. They're open almost all day long. Gaps are rare. They're not very common. When we see a gap, well, this morning, we came in the trade this morning, 8 o'clock Eastern Time. We pretty much knew that eventually this market was going to find a way back up to fill that gap, triple measured moving the way down in the short term, and then bam, right back to fill that gap. They got the weekend gap filled, and you can really see they really did a good job at running this thing higher. Now, I do not want to throw cold water on the bulls right now, but what typically happens, though, is when we get that weekend gap filled, we kind of mess around a bit, and then we finish the job going back down to almost, come back, fill some unfilled orders, and then right back to where we came from. Again, I want to believe these buyers right now, but historically speaking, most of the time, this is just nothing more than a head fake. So, what are we looking here for both sides of the market? Well, the buyers ultimately have two choices right now. Choice number one is a breakout pullback above that falling resistance, get that moving average to come back above, and they can buy that pullback with a breakout pullback right on the way back up to that high. If we do go that direction, then look for this to be more of a spike in channel, right? And we'll look for that to be kind of like a spike in channel for a channel target going back to the upside here, right? So rotation, high to low, low back to high. We don't know enough about it yet to really make that distinction yet, but that's what you'd be looking for if it doesn't pull back, if it just breakout pull back, right? Breaks above that trend line, pulls back, holds above it, right, and then gives us that shot, right, to make some money going to the upside. What is a little more likely is that this overhead trend line intimidates those buyers, right? Buyers aren't going to want to buy if there's resistance in the way. So by deterring the buyers here, what does that do? That gives the bears, who are likely looking at that weekend gap, right? They're saying right now, oh, perfect. Walk away from this, bulls, and give me a shot. Now, there's a lot of support waiting down here. You get the battle zone at 45.62. You get the weekend gap. Don't forget about that. That's at 45.71. That could easily be used as support. And then you've got this, what I think to really be one of the biggest clues is this 45.83. This is unfinished business. This is what we call a naked reversal line. It's an untouched reversal line at 45.83. You can see they definitely came close. They got to 84. Now, close is rarely close enough, right? Think of that as a gap as well, right? We talked about this weekend gap getting filled. Well, think about that as a gap. There's a lot of buyers that had their orders waiting there at 45.82, 45.81 that didn't get to participate in this party right now. And remember, financial markets, liquid financial markets, are ultimately built to fill orders, right? It doesn't matter what theory you follow, market profile theory, right? Market auction theory, if you will, right? The market's going to auction from supply and demand, support and resistance, overbought to oversold. It's going to try to fill in those auctionable areas. And think of this area here as 45.83 as being an area of interest because there are unfilled orders sitting there. So that would really, in my opinion, be the next spot here those buyers will be looking for. Breakdown, seller failure, get me down to that 45.83. Would love to test these areas here as support. And then with enough room, go back up and try to retest that high going through that trend line to get there. Now, here's where it all comes down, though, because if we just make a run for it lower here, sellers fail, then we have enough room. But this may get ugly, though, right? If it kind of hangs around here for a while, that trend line may continue to really be a thorn in their side. The buyers will want to buy at 83, but they're not going to want to buy at 83 if it comes 5-6 hours from now. Does that make sense? Right? Remember, buyers aren't going to want to buy into that area of resistance. So a lot of this is going to have to do with when this opportunity comes. So buyers breakout, pullback, seller failure with enough room to go back up so they're not buying into that resistance. Now, what if you want to be a seller right now? Well, the first opportunity here would be to look for a pullback to hold and pretty much just throw caution to the wind, ignoring the rising trend line. I'm sure there are a lot of bears out there to say, no, Joe, no, this thing's going back to the low. Well, if you're a very confident bear right now, and again, I have reason to believe that this is a head fake, but I need to trade what I see. And what I see right now is no proof yet for the sellers. So in order for me to be a bear right now, I need to first see us hold a pullback and then really break down, right? Get below the 83, get below the 71. And in my opinion, I'm not going to be 100% confident in this thing until we can get and stay below this 40. Right? This is what I always remind you guys. When we get a reversal of a trend, there's always going to be plenty of time to be trading, right? You don't need to be the first person in before the market reverses. Now, if you want to be a little bit aggressive, sure, absolutely, right? Sellers take that breakout pullback, right, and try to run this thing, just kind of jam this thing down the throats of those buyers. If you want a little bit less turbulence, right? A little bit less turbulence, then of course look for that move to get back below the battle zone and then look for the sell from there. It doesn't matter which way you slice it though. The sellers will be hunting for that 44.72 to revisit those lows. I think a lot of it's going to do with if it does pull back, how this pullback looks, how this pullback feels. Because if we see if this thing just knifes lower here right now, buyers aren't going to want to buy it. It's going to give those sellers plenty of confidence now to sell that pullback. But if it just kind of wiggles lower here, kind of tiptoes lower here, then it's not going to give sellers a lot of reason to sell yet, and it's not going to intimidate the buyers enough, right, to keep them out of the equation. What the sellers really want is some strength downside. Tell those buyers, no. This is a head fake. We're going